The government loves to spend your money, and this is accomplished by more than taxation and other user fees. The newest $3.5 trillion infrastructure bill includes a by-the-mile tax, and those that are driving electric vehicles, which the government is pushing, will no longer be skirting road taxes. You will now have to pay a piece of the cost of roads and bridges, and all drivers will be paying an additional by-the-mile tax, which is already being charged in some major cities. Now, those drivers who can't afford newer vehicles or electric vehicles will be burdened with the gas and the by-the-mile taxes. Now, I'm sure you're happy to hear about this, but what does this new tax cost the average person? There are some pros and cons. You decide. What is the mileage tax? Well, the mileage tax sometimes is referred to as a vehicle miles traveled, or a VMT tax, is being proposed in various states and the federal government. This tax would charge drivers a fee based on the number of miles you drove in a given year. The specific rate varies by state, but the essential idea would be pay per mile. That makes sense, right? Well, the tax revenue would then go into building and maintaining and repairing those roads and bridges and infrastructure. No state has fully implemented a mileage tax for regular vehicles yet. Colorado, California, Connecticut, Delaware, New Hampshire, Pennsylvania, Oregon, Washington, and other states are studying how they can tax you through pilot programs in major cities. The specifics on how the mileage tax would work aren't exactly clear yet, but one pilot program gives us an idea. Out of Oregon, taxpayers would log their miles, going through either a GPS device, apps, or an annual state inspection form. And whether you would pay a by-the-mile tax or gas taxes is still not decided. It could be both. Hold on to your wallet, because rates will be around 1.5 cents per mile, and that adds up really quickly. The average driver clicks about 12,000 miles a year, which would cost you $1,800 a year. The main arguments for a mileage tax center around the revenue and fairness. Supporters say that more fuel-efficient vehicles have reduced the taxable gas consumption, and that leaves less money for roads and bridges. Additionally, there are some that have said federal gas taxes need to be raised. They haven't been raised in over 20 years, and it's simple enough. Revenue would be based for infrastructure, and that would come in a by-the-mile tax. That is something that they would think about. And there are organizations like Mileage-Based User Fee Alliance, yes, that exists, that argue usage-based taxes on roads are fairer. And this turns roads and bridges into utilities like electricity or water, and the more you use it, the more you pay. But there are some arguments against mileage tax. And even if you think the transportation infrastructure needs an upgrade, which it does, arguments against the mileage tax, well, even if you think the transportation infrastructure needs an upgrade, which it does, not everyone believes this is the best way to do it. The main arguments against mileage taxes center around privacy, fairness, and revenue. Polls suggest that people don't like the government knowing where they are and where they're going. I don't know about you. They especially don't like it when it's tied to taxation. Many are concerned about how the government would collect this data, and others fear how that data would be stored, as well as other purposes this information would be used for, and of course, it violates our rights. Some people specifically purchased a high fuel-efficient vehicle to avoid gas taxes, and they bought electric cars for the same reason. And some think that raising state and federal gas taxes would be a better approach. Now, mileage taxes have all the negative impacts of gas taxes and none of the positive impacts. Here's the bottom line. The mileage tax may not even raise the revenue promise. As much as 40% of the revenue generated by mileage taxes could go to private companies and not to what its purpose is. Factoring in all the fee collection, a mileage tax might not produce as much tax revenue as existing gas taxes. And that means they're going to keep those taxes too, which means the federal government and state governments will add the by-the-mile tax to your fuel taxes, and this will cost every driver an additional $1,500 or more per year. Are you frustrated yet? I am. If you want to see more videos like this, check out my website, carcoachreports.com, for more car smarts. I'm Lauren Fix for Local Now.